Welcome back, everyone. I haven't done one of these public Q&As in a while, so I figured it's the 1st of June. Why not do it today? So it is the first of the month, and usually what happens at the beginning of the month, a lot of the stuff that I trade goes ultra bullish, right? So it's not generally a great idea to go shorting on the first of the month. So if you see the average range is getting busted, try not to go against that unless you like really see all of the things lining up. There's a slowdown, there's loads of TPOs in a row, maybe you can short. But for example, there's a crude oil that's just gone a little bit crazy. So we're gonna have a look at what is going on. And so like I said, this is a public stream. Everyone can see this, anyone can send messages. Like I said, I haven't done one of these in a while. Usually whenever I do live streaming, it's for our members here. And it's very technical, so I'm gonna try not to sound super scary and super technical. So I'm not gonna be talking about in-depth strategies or anything like that. I'm going to try and keep it as simple as possible so that maybe some people joining us are not intimidated. Because, you know, when you kind of jump into a live stream where people have this meta language, you might be thinking, oh my God, what the hell did I just walk into? You know, it's like, it's so complicated. I will never understand this. But actually, there's a way to learn it. You know, as long as you kind of take it slow and you start from the beginning, and that's what the market stalkers method is for. Oh, by the way, I wanted to say that I have extended the Memorial Day sales, partially because we had the Blahtech VWAP release. So now we want to kind of have a promotional sale as, you know, a milestone for releasing yet another indicator. And that indicator might be pretty useful even for not market stalkers students, not just market stalker students, but also to traders who might be using VWAP and they're coming from other approaches. All right, let's see who we've got. So we've got Claudio, we've got Jeremy, we've got Ray as well. So that's all pretty good. I have Monster in my little tumbler here. So I'm going to get a bit of a hit of caffeine so that I can be ready. And then we're going to have a look at some simple technicals and try not to overwhelm the new people. All right, first up, let's have a look at what's going on with this crude oil. Now, as we know, crude oil has this inherent production cuts that have happened about a month ago. It doesn't seem like the price is catching up just yet. But at some point, you might notice that the demands are holding and that the lows are holding, so they're not being broken, and things are sort of starting to move sideways. That's exactly what we can see on this daily chart here. So even though there was a lower low, the price has kind of failed to move outside of this range. So this is a big range, right? Huge buying wick from... What's this? This is in April. This was in April. So then since April, we have kind of established the highs and lows, and we're moving inside those areas. Yeah, that's right. I think there were inventories, Claudio. So they're usually at 4 p.m. my time and your time, since you're around the corner. So let's have a look. Yeah, so they've gone through already. They have a build of 4.5 million. But anytime you have the inventories, that is a fundamental release. You're not going to find the moves happening right that day. You know, it can take a while for the moves to actually take hold. And the build technically should be bearish. However, as you've seen, the market just keeps shooting up. So let's have a look at the daily chart. So yeah, as you can see, very, very bullish move, attempting to create a reversal. So if I put my demand areas here, you will see that we have a potential for a reversal from the demand. So that might speak more to those production cuts. Very, very strong auction post that release. It is obviously deemed to be a very positive thing today, but tomorrow we might have a bit of a retrace, especially if we have like a super large day. Anytime you have a humongous day, you always have scope for some sort of a mean reversion trade. We have a new guy, Rio Yacker. Good morning. Good morning. Good morning. Well, it's the afternoon around my ends of the world, but yeah. Oh, Haluk is around as well. Hi, Haluk. I am getting better, thank you. Again, for those of you who don't know me, I do have some conditions that are throwbacks from long COVID and vaccine injury that I suffered. So I've been battling with a number of conditions for like 3 years. And I thought, okay, I've managed to sort out the extreme tiredness, that's great. However, it seems that I still have some problems with my immune system. So yeah, I went into some nettles because my dog kicked the ball into the bushes. So I went in to retrieve the ball, got stung, didn't think much of it, but then the next day my body just totally overreacted. I tried a normal antihistamine that didn't really do much, so I had to get a really strong one. That's helping, so thank you, Haluk. I am getting better. Hopefully by next week I will be back to pretty much normal. You know, fingers crossed. Mike is here. Mike D, hello. Haluk says, you look great. Thank you. It's the makeup. I have probably like a ton of makeup on me at the moment, which I don't normally do, you know, unless I'm doing like long form videos. I actually tend to be pretty light on makeup. It's just that I'm still pretty red. So I didn't want to scare any children that might come across this video. Just joking, obviously. Alright, so potential for bullish engulfing. Obviously we won't know whether this is going to hold on crude oil until the end of the day. But, you know, long time to wait. So that is to be confirmed. I did promise I'm not going to talk too much about the profile, but some things to take note of is that we started off slow before the inventories, and now we have a little breakout, well, big breakout, that is smashing all sorts of average ranges everywhere. Just because an average range is exceeded, that doesn't always mean that you should go the other way, because the average ranges, average true ranges, average daily ranges, and my concept of average session ranges that only looks at session averages, that is to do with time as well. When are the ranges getting exceeded and by how much? Okay, so if it overshoots the average range area, if it doesn't react to it, don't go against it. If you're going to go against it, you're going to need, again, time. You're going to need something to settle down, to stop going crazy, and to chill before you attempt to trade to the opposite side. So unless you saw this coming earlier, for now, this big trending day it's very dangerous to see where it's going to stop. So even if you get involved right now, you could be buying the top, okay? And that's why larger time frames, looking at your opposing areas, might be pretty useful. So if you look at the weekly chart, you want to see what's around, what chart location you're at. Are you at the bottom of a swing? Are you at the top of the swing? That kind of analysis is very, very useful, although it seems to bypass most retail traders. So I'm here to try to educate people to not have blinkers on and to actually have some sort of a systematic way of determining whether a chart location is actually good for a buy, for a sell, maybe a consolidation, you know, all of that plays into the market narrative. So yeah. All right, let's have a look at gold. Gold is another one of my favorite products. I've been a gold trader for quite a long time now. Let's take a continuous contract because I don't see a whole bunch of stuff here. Do I have, yeah, okay, here it is. Now this is going to be a white chart. I can't be bothered to change it to anything else. This is now a continuous contract. So we're still at the very bottom, very top of the swing for gold. So we had all-time highs all the way here. This is the monthly chart, so it's like a humongously large time frame. You're not going to be looking at trade locations on a monthly chart. That's just stupid unless you're aiming to hold this for like months and months and months, maybe even years. But for even for short-term trading, it's very important to have that larger time frame narrative. So immediately I can see that there were quite a few sellers stepping in. And now we're testing the area of common boundary before the market jumped away from the all-time highs. And that common boundary, in my way of trading, I like to refer it as the conterminous line. Conterminous meaning a common boundary. Very innovative. But yeah, basically it's a concept by which you decide where the market should continue in that opposite direction that was started later. That was started earlier. What is wrong with me today? Like I keep saying opposite words to what I mean to say, and I know I'm left-handed, but that's just ridiculous. Like I keep just saying tops instead of bottoms. Yeah, let's just pitch it to too much caffeine today, okay? Like my brain is kind of coming ahead of me. Yeah, so the conterminous line is a part of the supply and demand, aka order blocks concept. I like to use the terminology supply and demand and institutional order flow, primarily because I trade instruments that actually have a physical supply behind it, so gold and crude oil. They're actual physical commodities. And then B, because it's just something that I've been using for 15 years, and it kind of explains the rise and fall in prices a lot better. So if we say that the sellers that are coming in here, and that we have this conterminous line, the common boundary before the market sold off even further, and if we say that the test of that should bring more sellers at some point this month, because remember this is a monthly chart, it then makes sense to say that this is a supply area, a sell area, right? Now this is not market profile, this is actually 101 institutional order flow, yeah? So because of that, I would probably err on the side of looking for shorts at some point, even intraday. But it doesn't mean I'm just gonna take any breakout and then just run with it. We have to have certain conditions intraday that will speak to that short narrative. But when I see that, for example, I might go in a little bit harder with a slightly larger position to account for the fact that we have the narrative of intraday setups matching the very high time frame narrative. And that's where the skill has to come in, right? So now as I kind of start dropping down through the time frames, you might notice that today gold is very bullish. So it's like, yeah, we're going to conterminous line of the supply on the large time frame, monthly time frame, but the day is very, very bullish. So if you do want to short, you might want to have a look at what you've got on the daily chart and weekly chart, but that's more for awareness. Again, you're not going to be using weekly charts for locations because even a weekly chart area can take like 2, 3, 4 weeks to set up. You're not, we are not swing traders. I'm an intraday trader. Most of my positions, if they last like 2 hours, that's too long. So I typically aim for a 45-minute trade duration. And naturally, those kind of levels are going to play into another kind of narrative that has a whole other set of conditions. But the core backbone of this sort of analysis is to be aware of what the larger time frame institutional orders have done. What are the levels that they find interesting and why? So right now I can see that we have a bit of liquidation going on. And with the liquidation, if I go back and just kind of go back to highs, lows, and very simplistic terms, I can see that this low here has been broken. So there was a low here, we've gone lower. Technically that means a downtrend, okay? So we have a very fresh downtrend on the weekly chart. So if you want to sell, again, not today, but if you want to sell at this point, at some point in the week, you should really do some kind of analysis of the daily chart potential sell areas. So what is a sell area? It is an area where you can see larger sellers that have come in previously. So we don't want flimsy little sell areas like, for example, this thing here, right? So this is a weak sell. We're not interested in that. We actually want to see like confident selling, confident unequivocal selling. So one such area that I can see, yeah, we've got one here, but this is too low in the distribution curve for me to give a proper true sustained reversal. And this is where you can use another concept of mine, which is called Q points. So anyways, this one, I would maybe use it as a slowdown, like a speed bump. But if you really want to look for shorts that might last longer than, a blink of an eye, this would be a better option because this is a very strong sell. There was a quartile area here, so this whole area is inside a bigger swing. So it's kind of like that top area of the swing without going too deep into what Q points are. But you're effectively just looking at the top and bottom zones as your levels of interest. Now, depending on what's going on the larger time frame narrative, you might be either interested in the selling zone, which is all the way up here, or you might be interested in the buying zone, which is all the way up, down there. So when you look at it from that point of view, and when you know that we've come off the all-time highs, well, clearly the daily Q low, as I like to call it, is not going to be of much interest to me. So this, I'm actually expecting that to either be limited in the reaction or for it to break down completely, right? I see Padawan has joined us. Good morning. Good morning. Or evening. Or afternoon. It's afternoon here. Almost evening. So yeah, I might expect a bit of a bounce, but ultimately I would say that this is going to be broken at some point. I don't know when, that is an unknown, so there's no point of me kind of saying things, oh well, I think today if this gets here and then we get all the way down here, it's going to go up. I don't do that. That's like Mystic Meg territory, right? I just go by whatever is already on the chart. It's much simpler. But on the daily chart, like I said, there is already a sell zone. So if I do want to sell, that would be an area that I will be looking at. Let's go back to the current contract now. So current contract, here we are. Dropping down to the 30-minute chart. To have a look at what has happened on the profile. Again, I'm going to try not being too technical. This red area, this is the first hour of active trading. We like to refer to that as the initial balance area, okay? We use that as a benchmark to read how well the auction is doing or whether the auction is failing or succeeding. Obviously, a lot more to it, but that is one way to figure out whether you actually have a valid move or not. Now, once the price has gone outside of that first hour of trading range and successfully closed above it, like we have here, and what do I mean successfully closed? Well, if it closed one 30-minute candle above the first hour trading range, you can deem that a market stoker's breakout. Because I don't do breakouts of major levels because usually you get stuck in a liquidity gap. That's not a very good idea. But these kind of breakouts intraday, they can be quite lucrative. However, there are two ways of entering. One way is just to enter when the market breaks out of the first hour trading range. So you're basically guessing, not something I like to do, but sometimes it's okay to just go in if you're pretty sure of this momentum. that might be acceptable to do. Obviously, you need some data sets and statistics to back that up before you start doing things like that. But my favorite way of entering is to actually wait for a pullback to this first hour trading range, right? So this is the edge of the trading range, so I will look for a pullback and then try and position myself somewhere around this zone. One thing to know about me is that I look at every key level as a zone. It's never just a singular price point, right? So whenever I say, yeah, initial balance high might be an area to join the sustained auction, I don't really mean 1988.5 and just that and nothing else. And you have traders who are a little bit less experienced who do just that. They place limit orders thinking that the market is like super responsive and like an exact science. It isn't, right? The market can turn around wherever, whenever it wants. But once you've observed these events for, quite a long time, or if you have some coding skills, you can even use Python to come up with different stats. But obviously you have to have some pretty fierce coding skills to do that. And to know what you're looking for, because not all conditions will be relevant. Some of it might be overkill. But yeah, initial balance high is the top of the first hour trading range. And that was a pretty good area to enter this particular trade. Right now we're seeing the auction just continuing. It's not the strongest auction. It started off a little bit slow. Why do I say that? Because we don't have immediate follow through. Like without even looking at my profile, which are these letters here, I can just literally tell you that it took a while to get going. True strong auctions are actually pretty rare. You might find them like 25 to about 45% depending on what you're looking at. Gold actually has a bit higher statistical relevance for trending days, primarily because of its connection to stocks. It's actually, for a lot of the years, it was inversely correlated to stocks. And stocks have, more trending days than, like, let's say, a Forex pair or something like that. All right, so Jeremy says, would playing that GC long off of the initial balance would have been rough because there was a Q high ASR ADR tag daily consumer side. Well, not really. Again, I told you that on the daily chart, this was too low in the distribution curve. So we've already had a reversal and the price obviously going up. Anything that is close to the reversal, that's not really a supply. I consider that an unclean arrival. So it's like unclean arrival, and then you are effectively looking for the market to go through it. But anytime you have an unclean arrival, it can cause a bit of slowdown. So it takes longer to rake it because obviously there are some orders there. But anytime anything is so low in the distribution curve, I don't really consider it super relevant. Certainly not for any sustained moves. If I'm looking for a strategy change or directional change, this would not play into that. So it's just too low on the daily chart. So those kind of things is where I differentiate between the speed bump, effectively, and a proper originating area of selling or buying that was done by the institutions. So hopefully that makes a little bit more sense. Also, first day of the month, I don't know when you joined, Jeremy, but I did speak about this. It's not a very good idea to short on the first of the month. Because a lot of the times, my products that I trade, they go super bullish. That means statistical averages will not be respected. And then you also have to consider when those average ranges were exceeded and whether there was a reaction from them. So if we see this line here, if I go back in time using my Blahtech time machine, by the way, all these indicators are Blahtech indicators. We have just released Blahtech VWAP, so if you want to go and look at the live from yesterday, you can see me explaining stuff there about that particular indicator. And then obviously we have the flagship indicators, Blahtech Profile, Blahtech Supply and Demand, Blahtech DR, which is what this line that I'm about to show you is a part of. So here is the average daily range high. Now, two conditions. when is the range getting exhausted? And 2, is the price reacting to it? So first of all, the price went straight through it, ignored it completely. Then we have the average session range up here, which actually was 63 ticks away from the initial bounce high. And when I'm talking about using this as a bounce, how much profit do I normally take? 55 to 70 ticks, right? Like 2R is usually what I take. Sometimes I extend it if I can get a really good entry, but usually for these types of trades, when I have a limited profit margin down to or up to my levels of orientation, I'm not really going to care much about getting like 70 ticks to the tick for a tick sort of moment. So I think there was a lot of space here. Certainly a space for almost 2R. So you would get like 65 ticks. So that's like 95% to the target. You know, I'll take it. I'll definitely take it. So yeah, for me that wasn't really a problem because you're not actually entering a breakout at the area. You are ignoring the area that was ignored by the market and using an orientation point to trade within the range that was already established at that point. So once the market stopped and didn't go back to the initial balance, to the first hour trading range, and created this little bounce, that was my cue to basically run a little trade. Okay, so that's the only trade that I've done today. And I doubt that I'm going to be trading. Jeremy, not so last day of the month is not really buying. Last day of the month usually happens opposite to whatever was going on for the rest of the month. So it can go up, it can go down. It's, you know, contextual depending on what we had. But even that, it's not necessarily like, oh, definite thing as a strategy. Even Fridays can give you an opposing areas because the institutions are going into the weekend and they're kind of consolidating their positions for the weekend, mark to market. You know, they have to really be very careful. I'm sorry, I'm still very itchy at times. So yeah, because of that, it's not like, oh yeah, every Friday or every end of the month we look for opposing moves. But it just so happens, you know, if it's there, we might want to take it, right? So that's something to consider. So yeah, trading away from the average ranges that have been reactive and trading straight into them, two different things, okay? But very good questions. That's a very valid question. However, you know, separate trading ideas. One idea would be immediately going against all of this. That's not what I'm saying. I'm saying work within the range that was established at that point. Because at one point, if I pretend that we don't have all of this, so I'm going to make this really black and opaque. That's not going to work. Why didn't that work? What the hell? Maybe draw object as a background. No. Is that like a setting? Why is that not covering up? Okay, so let's do it another way. So let's just grab the screenshot of that. And if I pretend that all we have is this, so we don't see this pop up that we've had before, and all I see is this. So we have the average session range that was reactive all the way down to the initial balance high, which is our orientation level. It fails to fail the auction, so the auction continues because we close the candle still above that range. That's the defining factor for the trade, okay? It doesn't matter that the ADR was there because the average daily range didn't give a reaction. The market like blatantly just went straight through it. So we're not interested in it either, right? Jerobi, that is literally a thing of preference. So I actually trade London these days as well. So I want my VWAP to start for London. If you don't want it to start for London, you can actually control that. So session start time. If you only want it to start for COMEX, but I kind of feel that it's a little bit smoother because London trades do play a part in my strategy. Okay, I want to see what London has done and whether that is kind of still carrying over into the COMEX session, or whether we're kind of changing the direction, which would give me a little bit more likelihood that maybe a reversal intraday, a V-shaped reversal could be coming, which is very common in the stuff that I trade, like crude oil and gold. V-shaped reversals happen all the time. But if you just want the VWAP to start and end for your, let's say, Globex session, in my time that is 13:30, which is 1:30 p.m. And then we would end it right at 9 p.m., which is again my time. And then you just have the VWAP for that particular session. But like I said, because I do use London moves to have a certain overview and a feel for where exactly the price is. Are we hanging above the average price? Are we kind of just wagging through it? You know, all of that gives me a little bit of a nudge. It's not like a do or die indicator, it's just a supportive factor in the whole story. But for me, it just makes a lot more sense that I started on the major session of London and then carry it through the entire Globex, aka COMEX session. Even though Globex keeps going after COMEX settlement, that's why we use Globex hours, because I actually still have some setups that count on trading after settlement very frequently. So I kind of like to extend the VWAP to basically show me exactly what's been going on. And if we go back in time, you will see that the London did a failed auction and then broke away from VWAP. Then we came back down, but then it was swiftly bought back up. So this all told me this is a very bullish day. Little supportive factors like that, you know, it helps. It definitely helps. But if you're going to use it like do or die, kind of like I'm going in off VWAP, probably not a good idea. Okay, I have a little mini course that I'm going to release completely for free. I'm actually just working on that today. Yeah, so Jerobi, now you know the strategy. You know about the post and market reversals. So if you go back through the lectures, because I know you're on the program, in level 2, when I'm talking about the Frankie fake out, you know, Asia and London behavior, cat and mouse. You'll know what I'm talking about, right? Again, I'm not going to go into that. It's way too complex, and I would be here forever if I tried to explain that. But it just makes sense for me to track what was going on with that average price movement and to see whether I can glean anything from it. And today, what we can glean from it is that it's a very bullish day. If you go back some other time, you will see that on even the previous day, is it the previous day? Yeah. You will see that VWAP is kind of in the middle of everything. So that's not very strong. And then throughout the day, yesterday, in doing COMEX, we also had this VWAP going through the middle, right? Mainly. So it goes straight through the thickest part of the profile. So that means the price is kind of hugging VWAP. Ray is in the house. Mr. Have you hugged your VWAP today? So yesterday we were hugging VWAP. And that is an indication of not a super strong day, in my opinion. But when the price jumps away from that and stays away and keeps getting bounced off of it, and the price almost kind of runs away as if it's like some kind of a you know, leper colony or something. It's like, ooh, run away. So that means it's a strong trend. To explain it in a funny way that can be burnt into your head. Jerobi, day range fill might not be valid. Like, if the bigger the day, right? If we end up like a bazillion ticks away from the initial balance, day range fill would be very limited. I always warn about this, right? Why? Because by the time, let me change to a larger screen here. So by the time we get to the end of the day, which is what he's asking, effectively you're gonna have a potential for a P-shaped day. A P-shaped day means short covering of some sort. So because of that, it is a sign that the institutions have liquidated some of their positions, and now the price is going very strongly away. So by the time that we settle somewhere up here, we might actually end up with a distribution curve at the very top of the price range. And that is never a good sign for fading the day's move. You need something that is a bit less crazy. I can see that here we've just started leaving single prints on the way. That's another sign in the profile that is the market generated information. All that's saying that is that the auction is pretty strong. At the moment, you shouldn't go against it, right? It took a while to get going, but we're still strong, we're still going. So on the first of the month, I will probably stick away from fading things too much. Again, you have to have an awareness of where we are in the month, what can be happening, why this move is happening, and first of the month is always the time when the institutions are putting on new positions. So naturally things are going to go nuts, right? And if you look at equities, let's take a look at things across the board, yeah? This is an ES chart. Lo and behold, ES is also very bullish. So now, throughout the years, gold and equities have had an inverse relationship, but that is not 100% correlation. That is actually usually on days when the market is talking about monetary policies, we have a Fed rate decision, or anything else that pertains to the economic conditions. NFP is one such release that should be coming up tomorrow, or maybe on Monday. Sometimes they change it. So again, the awareness of why things are happening, where we are in the month, and how some of these assets and asset classes correlate to each other for particular events, it's going to tell you quite a lot. You don't need to go super overboard, because I'm not a macro trader. I never claimed to be a macro trader. I do understand it pretty well, but I would never make intraday positions based on the macro view. Because I'm not going to hold something for 3 months, by the time that the macro actually shows up as a sentiment on the chart. Not interested in that. My trade durations are 10 minutes, 45 minutes, maybe an hour, and then I'm done. If the price is very slow, if we're on a very slow day, I might leave it for a couple of hours. But again, that would be it. So yeah, everything is bullish. Don't go against it. If you're not in a trade already, don't try to fade this. It's better to just go and do something else and then come back tomorrow for the Friday, when you might have a more normal day and the averages might not keep getting smashed. Like look at this. ES is also going straight through, right? VWAP, again, Eastern European. Give me a break. VWAP is very far away. And whenever it's very far away, it's always a bit tricky to use it as a mean reversion, especially on the first day of the month. So if you're not in, leave it. Don't be a grasshopper. We do not want grasshoppering. Grasshoppering hurts the accounts. If you're new here, grasshoppering means if you're just losing it after a trade or two don't go too well, and then you just go nuts with entering trades that have no rhyme or reason to them, just for the sake of being in there. FOMO, impulsive trading. You're not actually using strategies or your brain. You're literally just clicking buttons, and that's definitely not what you want to be doing, even as a swing trader, but especially as an intraday trader. It is very, very... Intraday trading is very sensitive to those kinds of impulsive moments and inconsistencies, I think would be a better word for that. So the more inconsistent you are, the more you're gonna suck as an intraday trader. Sorry guys, it's just how it is. And that's why it's one of the most difficult things to do. It's like investing on steroids. Any mistake comes back to bite you, and it's just like somebody throwing acid in your face, like immediately. Jeremy, we have Market Stalkers merch. I don't really promote it much, but this is one. Hold on. That's one. This says oil is slippery. Crude oil is slippery. With Bob. Bob is our little mascot. We used to, I think we have some shirts as well. I don't know what's going on with that. Every so often we kind of change stuff. There should be a link below somewhere here. Yeah, so the tumbler that I just showed you, I'm gonna put it underneath. Then we have a tiny chameleon t-shirt. We have some pretty funny ones as well, like with massive things. And then step 1 to stop grasshoppering. So I'm just gonna put these down there. And then what else? That's it. Alright, so now I've got like about 5 different merch things. You should be able to see them underneath this video. Do or die Bob. That's a good one. I'm going to tell my graphic designer to do that. Yeah, stickers. Yeah, that's also something that we were thinking about. Bob sticker. I'll get Nick to do that for us. Because I can do a bit of graphic design, but I just don't have the time. Alright, but some merch is down there. One of the reasons why I wanted to do these tumblers is because you guys know that I don't like having open cups around my trading desk. I need to dye my hair, because see how grey I am? It's not because I'm old. It actually is. Cover that up. So yeah, basically I wanted to have a tumbler that you can kind of close, because I've gotten into trouble spilling my coffee, and I like to drink coffees, and you know, I try not to eat at my keyboard, but I do like to drink coffees. So anytime I had an open cup that is not like super heavy, I always end up like just spilling it all over the place. You know, one of those days, one of my things got stuck, like the 0 got stuck, and I was in so much loss that day. Luckily it didn't like hurt the entire account, but it wasn't bloody pleasant, you know. My sister designing anything that doesn't that she can't physically sell in her shop. She's just not. It's actually her birthday today, strange enough, so happy birthday, Sandy. If you're watching. I do need to text her. Bad D. But yeah, so one of the things that that why I wanted the tumbler that you can close is because while I like drinking, I don't like spilling things. So I thought to myself, well, what could be better than actually getting a merch that my market stalkers can use, right? So if that's there's also a smaller tumbler. I like the big one because I need a lot of caffeine. I'm like probably caffeine intolerant at this point. Again, joke. But yeah, you can get a smaller tumbler, which is half the size. This one is more like the size of a shaker, of a protein shaker. I'm only little, but I need caffeine, so yeah. And this is actually a very heavy cup, so you can't, this is just the Mandalorian cup, it's not mine. It's something that I got for my birthday, and it says choose your path, and then there's a little Grogu here. I'm a huge fan of Mandalorian, by the way. I even bought a little doll. It's like this size, and it's Grogu, so we keep that downstairs. My sister is good at, like, she actually made me, she makes these crocheted little things, like little dolls and just rabbits and bunnies and bears and whatever, and it's pretty cute. So she sells that in their shop because they have a shop. So yeah, interesting stuff. So if you want to pick up some merch, it should be now below the thing. I actually see that we've also become available for the super thanks. So for example, if you're watching a free video and you find it very helpful, or you've kind of managed to sort out some of your issues, you can actually pay like $1 or something to say thanks. So that's now an option as well. It took a while for that to come in. I think it's when you hit like 10K or something, they tend to release a whole bunch of new stuff. But yeah. Right, so I'm just checking emails to make sure that I didn't miss anything. Okay, so I do have a thing. Okay, fair enough. Somebody did that trade from the initial balance high. That was great. Use the 5-minute price action. That's very good. Yeah, I'm proud. Proud Mama D. Yeah, did I mention that we extended the sale? I don't know. So yeah, we extended both of the sales with Market Stalkers and Blahtech. So now if you go to Blahtech MQL5 page, you should be able to see some products that are under $100. So that's the sale price, right? That means the sale is still on. If you see the profile and supply and demand going above $100, like 150 or something, that means it's not on sale anymore. But I think I actually spoke to our CTO today. He runs Blahtech. They're our parent company. If you guys don't know why, there's like two things. Basically, I'm a managing director both of Market Stalkers and Blahtech. But technically we are separate entities. So Blahtech did buy Market Stalkers at one point, so they're our parent company. But I don't, apart from the software development side, like I don't really control the promotions, I don't control their pricing. They have a whole ton of other projects that they're doing aside from Market Stalkers as well. And again, I have no input into that. So whenever there's a promo, sometimes I might not be aware that there's a promo on Blahtech, but this time around, because we released the Blahtech VWAP, we were actually in the same room for like the first time in a long time, rather than just being on like calls and stuff. And we actually agreed that we're going to run a promotion together. So the one promotion that I have on the Market Stalker side is it was basically for Memorial Day, but I've now extended it, and it's sort of more like celebrating the release of Blahtech VWAP. So with that, you can get £500 off the Market Stalkers method, off the Bronze, Silver, and Silver Plus membership. Whoever is on Gold, you guys know that Gold is more just my own coaching and consulting mainly, so it's not really a part of any promotions. But if you're really angling to get onto Gold, and we happen to be still running that promotion, that could be an option as well. But again, it's depending on whether I can accept you onto Gold or not. At the moment, I think we have enough people so we can have a chat, but you can start watching the lectures, but you probably won't be able to start the intensive coaching. Let me have a look. Oh, there we go. Okay, so I have somebody finishing end of June, so that's one spot. And then I don't really have. When is he finishing? Yeah, and then I don't think I have any spots because I have some people waiting to start the coaching as well. So then it's 1, 2, 3. Yeah, and then it's going to be too many people, right? So you probably won't be able to start until like October, November. So if that's something that you want to consider and you're interested in gold, get in touch. I know that a couple of you, a lot of you guys are gold members anyways, but I know that a few of you have asked me about becoming a gold member. And you mentioned like May or something. So, you know, just keep that in mind. The start time for intensive coaching will now be October. I can't have more than about 7 active people at the same time. I'm still recovering from my ailments, and I'm still working out this allergy nonsense that I now have. Once I sort that out, I might be able to ramp up my schedule, but again, I have to be very careful so that I don't push myself back. Nobody wants sick D, right? Nobody wants me to do less videos and not to do any coaching of anybody. So I really need to prioritize myself, which I haven't done like ever, guys. Like, I'm always somebody who just pushes through everything, which is why I got myself into trouble. So, you know. Jeremy, so the initial coaching period, you can choose from 6 or 12 months. If you're somebody who doesn't have more than 3 years of trading, like active screen time, I usually say, you know what, it's probably best to do 12 months first. However, for financial purposes, because I know that it's not an easy thing to do, just to kind of plow in like 7 or 8 grand at once, you can just start with 6 months and then sort of kind of have like a couple of installments, so to speak. So pay for 6 months, and then after that we can review, and you can then extend. At that point, you just get a link. Unless you're like super grasshoppery, not coachable, and you're annoying me, in that case, you're not gonna get an extension. So yeah, some people are really not coachable. Not many, but I have come across 2. In all of I think it's been like over 300 people now in the last 3 years. So some people are just very stressful to deal with. They don't listen. They never want to take the critique, and they never want to try and change their ways. They're always right. And they try and make excuses for bad trading decisions. So those kind of people I usually don't extend, and I just say thank you, but we're done. Wishing you all the best in the world, mate, but I can't deal with you anymore. So yeah. As long as you're not like that, as long as you're pretty pleasant, you know, normal person, just be normal. That's all I want, right? Yeah, and then extensions of the goal coaching is not a problem. Now, one thing to realize is that, yes, it might look like an upfront investment, because it is, you know, for some people it's a lot of money. But at the same time, we're talking about performing seriously for many years to come. So I'm not doing coaching so that you guys can make $1 grand a month, all right? People who have come away from my coaching, they have developed, like people like Tech Addict, I did an interview with him, they've developed serious sources of income, you know? Even the crappiest traders, like the 2 guys, one of them took easily 35 grand in performance fees, like easily, right? But some of the others, we're talking 6- and 7-figure incomes. So think of it from that way. It's not like, oh yeah, oh my God, what's going to happen? I have an 80% hit rate, maybe even 90%, but I'm counting the 80% from people who have ghosted me. They kind of signed up, and then I heard from them like 3 times, and they never took advantage of the goal mentoring. I don't know why. Maybe it's because everything was clear to them. Maybe because they felt a bit self-conscious. Maybe they didn't feel ready. Because once you get into the portal, you can see what kind of people are there, what sort of plans they have, the kind of performance numbers that they're coming up with. And it's a bit intimidating, and that's why I say to people, once you go into the portal, yeah, have a sniff around, but don't focus on what this guy's doing, that guy's doing, you know, how many times this guy's correct, the fact that, you know, Haluk like smashes it at 80% hit rate all the time. Don't look at that, right? Look at yourself. The reason why we have separate threads is so that everybody can focus on their own journey. Like I said, you can read each other's posts, but we actively discourage too much interaction between the members themselves, because everyone's at a different part of their journey. Somebody might only have 2 years of trading, other people might have 15 years, and they have entirely different problems. One person might have an issue with the fact that they're just impulsive, but they see the market really well. then we might have a new guy who has traded pretty well for 2 years, but is still scratch. So he hasn't lost a lot of money, but he's just not making money either. Okay, those are two very different problems to have, right? And then also we have people who have confidence issues. Usually people who have traded for a long time, they tend to develop more traumas. So therefore I have to undo the traumas first so that we can place some good trading habits, replace the bad trading habits with the good ones. And typically those are the things that take the longest, right? So yeah, that's just some detail. You guys know how I do coaching. It's usually very straightforward. I've done reviews on this channel on Thursdays before. Again, it's very constructive. Everything is a written form, so it's not like we get on a call and then half of it gets lost, or it's a video that we record and then you have to read it. No, you can go back and you can read stuff. No problem at all. You know, you're like, well, what was I doing on that day? And you can find it in your email because you get notifications about the replies that you received. So everything is instantaneous. Some people try to get my attention through the general email. That works on a lot of the occasions, but guys, we get a lot of emails. So sometimes if I receive like over 140 emails in a day, obviously some stuff is going to get lost. And I do try and go back through them. But sometimes I have assistants like Mark and Susie, and you know, they kind of read the email and then it's unflagged. Like it's just it's not unread anymore. So unless I go trawling back to see which emails have come in, or I actively keep a pulse on it, I am going to miss it, right? Typically the best way to reach me is around Friday, because on Fridays I'm not doing trading. On Friday I'm usually doing property development, painting, building, whatever, and I have time to read and respond. So if you want my attention, try to get me on a Friday. Then I will see it. So yeah. But yeah, Jeremy, if you want to talk, obviously we have to talk first. Do ping me an email. I will see it because I'll look out for it. And then we can just take it from there. All right, so we're coming up to an hour, and since this is a public Q&A, I'm just going to say I'm going to be here for about an hour. It's not going to be 90 minutes. I don't want to drown people. Oh, okay, so here I'm going to give you the email. If you go on the main website, it will be there as well, but it's just easier for me to type it in here. So there you go. So you can also say for Deanna in the subject, and then obviously somebody's going to flag that and leave it alone because it's for me, it's not for anybody else. But you know, when people kind of just go no subject, or I might have responded to an email like a year ago and they just go RE, and I'm like, well, I don't know who that's for. It could be for Mark. He does a lot of IT support. I don't know. But yeah, if you just say for Deanna, I'm definitely going to read it. All right, any more questions, guys? So now is the time to do it before I disappear into the sunset, literally. Well, no, actually, the sunset is pretty late now because it's the summer. I am preparing that VWAP short course. I kind of touched upon a lot of the strategies before in the live yesterday, but I just wanted to make them into a proper kind of PowerPoint, you know, very clear-cut bullet points with some good examples. I even did a trade based on that to illustrate things, so all of that is going to be a part of the mini course on YouTube directly. Another thing is that on Udemy, we decided not to be a part of Udemy promotions anymore. They have changed their whole pricing thing, so that's something to note. Going forward, Udemy prices aren't going to be just what they are. However, I am considering changing the model to basically have 3 courses that are on Udemy, but just buying them on the main website for a one-off price. So what's happened is that before, we used to get quite a lot of high quality people coming to us, but they have done the discounts to death. And as a result, we're getting people from some very poor countries, you know, and that's fair enough, but that's not my target market, right? I trade futures, we trade the American market. I'm from the UK. I cannot run a business based on a third world country's requirements where people are, and one thing that really started to annoy me is that I'm getting a lot of people who are begging me to sell them the pro development course for like 50 or $100. Like, are you serious, man? That's my intellectual property. It's like, it should be a lot more than what it is. Like, I have a business to run. Do you know how much money it costs to run a business? It's not easy, you know? So for that reason, I just cannot financially carry on to sell Udemy courses for $9.99. It's just impossible. Otherwise, guys, market stalkers will not exist, okay? It's already like the smallest part of my revenue because I'm trying to keep everything super ethical in pricing. But if I get to the point where we're just not covering our costs, that's not good. And then we're going to go away and market stalkers will be no longer. We don't want that, right? So yeah, the prices are going to hang around $49 now over there. But I'm thinking of making the price like 3 for $99. So 3 courses, market profile, supply and demand, and price action trading for $99 on the main course, on the main website. So if that's the case, we're going to be changing everything. Obviously, we're still going to be available on Udemy, but I'm just not really happy with the way things are running. I don't get students' names either. I don't get their details. Udemy don't allow external links to be posted in the promotional emails. Like, what's up with that? So I'm just not very happy with them. It was a great platform to get the course out there, but I think it's time that we move on to another model because their pricing has degraded the everything so much that the only people, or a lot of the people who are coming from the third world countries, they are now badgering me because they can't afford some of the other offerings that we have. So Blahtech are also getting a lot of emails with people trying to haggle. Like, what's up with that? You know, you can't haggle a price of an indicator. That is what it is, right? If you're not happy with it, don't buy it. Don't try and haggle. We're not on the market, like, outside the door and just going, hey, can I give you that much? It's not that kind of a auction process. But yeah, because of all that, logistically, I just cannot keep doing promotional prices because Udemy has become... So I used to get, you know, a sizable amount of income from Udemy. Now I'm not getting anything. It's like so pitiful. I don't even consider it an income. And I'm still getting over 200-300 signups per month. So you tell me, is that fair? I don't think so. Anyways, guys, that's it for the day. A bit of moaning from the business owner who is struggling with living costs and everything going super expensive. And also buying houses, which are expensive. Never mind. That's it for today. This is obviously the last stream for this week. Thank you for joining me. Be on the lookout for the Blahtech VWAP links that will be below this video. I'm not sure whether I put them below this video. I should have done. But anyways, I'm going to get on that. And also check out the promotional price of the Pro Development Program. So you can grab that for $500 less than what it normally is. Again, all the links will be down below. Enjoy the rest of your day and enjoy your weekend as well. Let's try to be less muppety and more market stalkery. Have a good day.